Okay everyone, here I am putting out another video about the stock market technical analysis. If you go back and watch my last video, it's been a few days, but I talked about where the sell signal should come on triple Qs. So we're going to start out right there. Guys, give me a thumbs up if you find value. So far this trade is working out very nicely, and we're going to talk about that. So my last video, I talked about a sell signal coming right here, and really what I was watching is this trend line. Really, this trend line on triple Qs right there. And I was, we were in here and I was talked about looking for a break of that trend line, basically an hourly close. And it came at the end of the day on the 22nd. And that was your short opportunity. That was your the best entry. And again, coming at the end of the day, it didn't give a whole lot of people an opportunity to get that best, kind of that best entry point. But, if you were watching the markets and watching my videos in advance, then you knew, I explained what I was looking for well before it showed up. So we hadn't had a break of that trend line when I talked about it, and I said, this is what I'm looking for. Should be a sell signal. From that break, and I have it circled right there, Qs is now down, almost 5%, basically 5% at the lows. And that's a pretty good size move for just a general indice, So the other thing I talked about is the first level of major support. I was looking to be around 382.96-ish. If we go to the daily chart, that shows up over there. And that's that former high right here. See it right here? This was your former area of resistance. We broke above, made a new high, but we're coming right down through that pretty good so far. We did hit it today and had a little bit of a reaction, but we're slicing right down through that. Not much of a bounce. The dip buyers, they stepped in earlier this week. We had 500 Dow point up days and then followed by big down days. So the dip buyers have been stepping in thinking they were right, but clearly they're getting burned today. And, this is just how it is. I get a lot of comments from people. They're really just trying to antagonize me, but talk about how, the dip, the market went up, I was wrong. And that's just a very impulsive day-to-day kind of mentality. I'm not going to be right every single day, but in general, when you have a trend, or a swing trade, we're trying to capture that swing trade. And there's going to be counter trend moves within that trade. So, that's all I would want to say about that is just, I think it's important to kind of expand your horizon beyond one day's price action. All right. Those moves are often meant to kind of trick you and capture you in there before, taking your money. So now we are, we're basically running into some support levels now. So we got another one right here. If I go to the hourly, started to mark these out as we've come down. This one right here, you can see we had some reactions. See this zone right in here? And we broke below, and it acted as resistance each time. So that level, which was support and resistance, is about 378.44, it looks like. We're coming down to that. That's probably going to be the area where we hold up a little bit, but because it's a pretty good sized down move today in the triple Qs. If we don't, though, then we have another area of support right here about 373.50, and that's marked out right there. And then we have this blue trend line going back to the daily. Just want to point that out. You can see all the times this blue trend line has been kind of your major trend of 2021 in the tech sector. See all those reactions? So, if we're going to come down to there, the buyers should be down there. If we're going to head all the way down here, maybe 372, somewhere right in here. This is where the buyers should be at. If we break through this, I'm not saying we're going to, but if we break through this, then we're probably starting a bear market, and we're most likely going to go, work our way lower over time. Now, it's not going to just crash. It's not going to just go straight down. It's going to work its way lower, bounce. There will be lots of counter trend bounces within a potential bear market. So, when you get those rallies, it doesn't mean the low's in for, the longer term low. We'll just use the charts to tell us what's going on there. Okay, moving on. Don't want to take too much time on that. SPY. So SPY's clearly breaking down through that support level of 454.24. And I've got some of these former levels marked out here. This is probably your target, 441.96-ish, depending on when we get there. I've got it circled. Again, that's your level of support. That's your trend line for 2021. And if I go back to the weekly chart, this is a longer term chart going all the way back to 2009 right here. This is the major trend that I've really been watching for many years. You can see it's been support all through here. We broke, it was resistance. There's your COVID drop. They managed to recover that, and every single tag of that trend line so far in 2021 is where the dip buyers have been, have been sitting at, trying to keep that trend. So if we're going to come down and hit that, that's probably the area I'd want to cover, and then wait for a break of the trend, or you could flip long and for a bounce trade. I think that would make sense down there. If we break this trend line right there, then bigger picture things are happening, and we're likely going into a bear market. Now the Fed is the Fed is out there trying to talk the market down. Clearly, they're trying to act more hawkish and take some pressure off. Take some of the glitter and out of the market. They're trying to take some of the steam off. So it's just a matter of how much. They're trying to manage the downside. So what you'll likely see is they're going to let the markets continue to fall, and once they think they've fallen, far enough, then they'll start to try to soften up and keep the market propped up a little bit. They're trying to manage the market pretty much through just their words, and not so much through their actions. So maybe they'll be able to control it, but you never know. If the market continues to sell off, I would look for the Fed to come out and start to be dovish, start to back talk all their taper talk and all that stuff. Okay, IWM, small caps. So this one's pretty much proven to be, pretty accurate on this one. So you have this big sideways range here in IWM. We had a breakout. On this breakout, I had all kinds of people telling me in the comments, how could you be so bearish? We just broke out here. We just broke out there. Why, makes no sense that you're bearish and you're wrong. But it did make sense because we had big negative divergences. And that's the other thing. People tell me these don't work. Well, they don't work from, every single day. They're not a timing indicator. They're not going to tell you, something's going to sell off today. Just tells you that the conditions for a sell-off are favorable. And then you look for a timing indicator with a break of trend lines. All right, I teach all these concepts in my course, and if you put it all together, it's a holistic picture of how to read the charts and manage trades. Link in the description below. Check that out if you're interested. But again, this is the reason why I wasn't bullish on a breakout, even though price was breaking out. The momentum was not, and the momentum was telling me that this breakout had a higher probability of failing than it did of just continuing to the upside. And sure enough, we saw the failure. There's you broke back into this range. And once we did that, in my video, I talked about, I think we're going straight to the bottom of the range, which is about down here, right around 209 or so. We're probably going to get there today, maybe tomorrow, or maybe Monday, but down to the bottom of the range. And that's going to be support. That should be your major support. Now, we might undercut it a little and maybe run some stops, but I would think that we're going to at least get some sort of a reaction there at that 209 area. Okay, so that's all I see on that one. Moving on. Gold. Okay, so gold, the gold miners have been, getting sold off the initial sell-off with the rest of the market. I don't think it's going to last. I think the gold miners are about to snap back. But oftentimes when the initial selling starts, the algos and the market's kind of programmed to sell the miners because, if there's a liquidity event, then people are forced to sell, certain things. I don't think that's what's happening. Here's gold bullion, and you can see back from 2018, this is your trend, your bullish trend that we've started. Every single tag of this trend line has held, and we're coming right down to that trend line now. Basically, we could go a little lower, but we're pretty much at it. So the bull trend's still intact. We're still above support. Trend line's about 1760 or so. And we still have that bullish divergence that has remained that showed up a while ago. So there it is. You'll see here how the price was moving lower back here during all, this is a daily chart. So this is back in 2020. And as we came in, we had this big plunge move right here on the August 9th. Gold plunged all the way down to 1680, kind of a major level of support. And when it did that, it made an equal low from before right there. And yet the momentum, as they go to the momentum indicator, see how it was a higher momentum. I have it circled right there. So that was bullish divergence. That tells me that, okay, this downtrend here, although we're moving down on this day, was likely about to reverse. The conditions for a reversal are there with that bullish divergence. And so far, we've seen that. We've seen kind of higher lows and higher highs. So we're coming in for another low, but if we stop in this area, we're going to have a higher low. And again, that's a bull market. You're just going to grind higher over time. A sustainable bull market oftentimes just moves higher over time. And you're not going to see you don't see the big parabolic straight up moves till the very end. And just to kind of back that up, here's Newmont Mining up, almost 2% today, while the rest of the market's selling off. Newmont is being bid. Now, Newmont's the largest gold miner, so that's telling of what maybe some of these other miners might do. We're not seeing, a bid in all the miners across the board, but the largest one is being bid. So that's, I think that's pretty important to just take note of. Also, Newmont, you've got the downtrend line here. This is really the big correction for 2020 of gold mining stocks. I've got all these tags of support. Right down here, we broke below that trend line. We broke up and we're just back testing again. So you can see we back tested again and, pretty much came in for another back test. So we're holding above it while moving lower, but we also have another divergent low. So I want to point that out as well. See this trend line? See how I have it trending up? How we're continuing to move higher in this PPO, and same with the RSI, just really continuing to kind of move higher in the RSI, and yet price just continues to drift lower. Each new low in price has been a higher high in momentum, meaning it's bullish divergence. So right here, just yesterday, we undercut the former lows right in here, just briefly, while the momentum was higher. All right, we're trending higher than we were before. That's bullish divergence. Again, I teach these concepts in my course in more detail. So check that out. Link in the description below. So we have bullish divergence. We're at support. Again, I wasn't really anticipating this leg down, but it doesn't change any technical posture of this stock. We were just kind of going like that, back testing, and one of these things is going to do that, and then we're going to start to uptrend. Or at least that's what I'm anticipating. Nothing's guaranteed, so we got to manage risk. This is a long trade KHC I stopped out of. I got stopped out right down in here at about 34, about 34.50. So this is the level I've been watching, this range right here. And we kept bouncing between the range. We did gap down right there, recovered the range, started to move higher on this gap down though, right here in this daily close. That's where I stopped out of right there. Because, it was a failure of that support line. And I talked about it in the past that, whichever way of the range we break is likely going to be the next direction, the next tradable direction. And we broke to the downside. So at this point, I think we're heading probably all the way down here to this trend line, another test of this trend line right here, which really is going to be, it's probably like somewhere right in here. Potentially down there at like 30.50 or so. So I'm out of this trade. Again, pretty minor loss, but small loss. But again, it's just part of managing the trades. You're not going to be right on every single one. And the ones that you find out you're wrong on, lose small. That's the name of the game. So out of this one, we'll see if we can get down here and maybe we have a better setup. Another thing is I had bullish divergence right through here. So we were drifting lower, making higher highs on the momentum. So that was bullish divergence. We had a breakout right there. It just couldn't really break to the upside of that resistance level right there at about 37.80. Since we couldn't do that, we've now dropped down and we've taken out that bullish divergence. See the momentum? I have to drop it down like this. We made a new low in momentum. on the RSI and the PPO, meaning that we no longer have bullish divergence. We now have downtrend. We have trending momentum to the downside and trending price. No reason to be long on this one, So I stopped out and moved on. This is interesting. I want to talk about the consumer discretionary ETF XLY. And I've been watching this trend line on the weekly chart. This is coming off your 2009 lows right here. So there's your lows, and you can see we don't have as much reactions as the SPY, but it's still a pretty congruent trend line with the SPY. And you can see we held support through here, broke back in 2018. If I can get that, there it is, broke back in 2018, and then let me move this. Okay, and then it's been resistance ever since. So you can see resistance, resistance, resistance here, resistance here. Now we recently broke above it, chopped around, breaking back down. False breakout, guys, right there on that trend line. So that might have been the top for XLY, which is just, that's just another nail in the coffin for the general market. You start to get these sectors topping out, and one by one they start to fail, and then everything fails. So maybe that's what that is. If I go to the daily, again, you can see here, we broke above, back tested, held, and then failed, basically. Big impulsive breakdown right there. That's a sell signal. It's a sell signal candle. And that did come with negative divergence. Let me mark that out. You'll see here, see that right there? See how the momentum is just dropping off, downtrending, and it's the same with the PPO there. Just trending down. Sorry, been having a hard time drawing these lines today. There it is, and see, we're just making higher high. There was your divergent high right here. That was a higher high in price than the former high, but the momentum was just dropping off. That's your negative divergence. We've got a sell signal on this one. As far as I can tell, this is going lower. Where's it going? Well, probably down to here, somewhere in this area. We'll say right about there, which is about 185.75, and then the 200-day moving average. I would look to for a tag of that as well. Let me find out where that is. And here's your home builders on the daily chart. You can see we've been basically just hitting this trend line here for resistance pretty much all year of 2021. We recently broke above it. There's your breakout. And we've now failed, came back below it, and we're just impulsively heading lower. So there's another false breakout right there. That breakout also came with negative divergence right there. See how the momentum's just started to drop off right in there on the RSI, and not so much on the PPO. Couldn't quite see it there on the daily. If we look at the hourly, it's probably there. Yeah, right there. See the momentum just dropping off while price continued to kind of work its way higher. So again, if you're not using indicators, you're just using price, you're never going to know this stuff. You're just going to see price continuing higher, all good. You're going to stay in the trade. You're oblivious to the fact that the momentum's deteriorating from underneath you, and you're going to end up being a bag holder. So you have to look at other things besides just price if you don't want to be the bag holder. And yeah, that's kind of what's going on here. So there's another false breakout. So, XLY has a false breakout, XRT, IWM, seeing lots of signs that we're starting to see kind of weakness in the market. And we're going to continue, potentially a longer term downtrend. Doesn't mean you want to just jump in and short right here and now. And that's the thing. A lot of people going back to the Qs, now they want to short. Everybody thinks, the market's collapsing, time to short. No, you don't want to short after the markets are down a bunch. You want to short as the market bounces into resistance. You want to short when the recovery looks good and everybody's complacent and everybody looks happy and nobody's scared. That's when you want to short, and you want to profit when everybody's starting to get scared. So kind of good, that's contrarian point of view, but that's kind of how that works. Okay, guys, that's all I got. A little tired today, so I will get the video out. Leave me a thumbs up, leave a comment, and I'll catch you on the next one.